so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in and investors right now are starting to panic and leaving the housing market in exodus fashion. And here's the thing, you guys, there's been a lot of rumors, there's been a lot of cheerleading how investors are going to save the housing market. And here's the thing, you guys, that's far from the truth. And what we're going to do today is we're going to review a Redfin article that goes into just how many investors have left the housing market. Now, you guys know that I've been predicting a few, catalysts as far as the housing market crash, none other than new home building, right? New home building, I think, is going to be, taking precedence at leading the housing market crash. But another thing that I've been telling you guys is I believe the rich is also going to lead the housing market crash. That I believe as a result of all of this investor share throughout our nation, I'm saying that most of those investors are weak. Most of those investors don't know what they're doing. Most of those investors have not gone through a cycle in real estate yet and are not properly prepared and insulated to go through it. So I'm saying that as a result of all those things, we're going to start seeing either bankruptcies, foreclosures, or probably most likely short sales. I believe as we go into 2023, even 2024, we're going to have a massive surge of investor-owned short sale. Now, obviously, you guys, only time will tell. Now, before I jump into the article, let me show you guys why I feel this way. I'm going to show you guys a quick snippet of a Facebook group that's for BRR or Burr investing. And just to show you guys what these guys are actually doing. We're not talking about investors that are paying all cash or 50% down. We're talking about investors that want to pick up real estate for nothing out of their pocket. Look at this post. Again, this is from a Burr investment group. So this is this is a rookie investor right here. And there's a lot, you guys, and they get bullied and humiliated in this group. So it's just, these investors are a dime a dozen. I don't know how often, I always tell you guys that, but investors are a dime a dozen. Most of them are egomaniacs that can't see past their nose. But there are some investors, I'm telling you guys, that are great human beings that actually can be super helpful. So not everyone is this egomaniac, but most of them are. Let's read this. Hello, I bought a duplex for 0% down in 2021. So do you already see the problem? So most of these investors, like I said, they want to buy properties and pick up properties with nothing out of their pocket. Do y'all understand how horrible of an idea that is? And I don't understand how they can even cash flow doing that, but whatever. I'm living in one side of it. My plan was to repeat this process to keep paying low down payments, obviously not 0% down because I won't be a first-time home buyer again, but I don't know. Maybe 5%, LOL. I'm still new to this, so I don't know how that part works. And I'm just thinking to myself when I'm reading this, I'm like, wow, you're investing in real estate and you don't understand how down payment works? Or the fact that you can't get an investment property for 5% down? Not legally, unless you want to do fraud, right? This is crazy. Let me keep going. Anyway, a bank told me it's not possible to do that and that the next one I buy will be 25% down, whether I live in it or not, because I can only have one FHA in my name at a time. Now, that is true, but if they do a primary resident conventional loan, they can do 5% depending on their DTI and whether or not they can afford it. But, from reading this, I can almost guarantee you they can't afford it. They can't afford another house. But they go on. Any of you have experience or knowledge with this? So anyway, my point is most of these investors, an overwhelming amount of these investors are brand new investors, poorly insulated, bad financing. Most of them don't even have any equity. If they're doing the Burr investments, they're locked into their house. They're essentially bag holders. So investors right now, you guys, are bag holders, right? They're bag holders. And not only that, loan standards just changed and will not allow them to refinance. Instead of 6 months, it's now 12 months. So they doubled the holding costs. Do y'all understand? Now, there are some very, very intelligent investors. I'll give them that. But I'm telling you guys, if you go to that Facebook page, it's just full of complete nonsense. I mean, people, from what I can see, are getting bullied into buying real estate. It's the craziest thing ever. Go check it out. But regardless, the name of the Redfin article that we're going to read is titled, Investors Are Buying Roughly Half as Many Homes as They Were a year ago. So again, you guys, investors are not going to be able to save us this time. So we got 4 bullet points right here. Bullet point 1, investor home purchases fell a record 46% year over year in the fourth quarter. Oh my God, 46% demand destruction with investors. Y'all, again, where's the demand going to come from? Let's continue. Bullet point 2, investors bought still, even though so many left, right? Demand is so crippled in the retail sector with primary residence, investors still bought 18% of homes that sold, down from 19% a year earlier. And again, the reason is ain't no one can afford no houses right now. Pandemic boom towns, Las Vegas and Phoenix, where I went to, remember? Y'all remember I went there. I flew to Las Vegas and Phoenix to get boots on the ground data so that I could, with my eyeballs, see and my ears listen to the sales agents and see what is really going on. And I mentioned the investor share in Phoenix is out of control, you guys. It is out of control, especially short-term investors. But here's the thing. Pandemic boom towns, Las Vegas and Phoenix saw investor purchases fall over 60%. Over 60%, more than all of the other metros Redfin analyzed. So I would say that I went to the correct metro areas, although Seattle is doing its own thing. Investors pulled back from single-family homes more than condos and townhouses and high-priced properties more than low-priced properties. Now, again, on top of that, remember also what I'm saying about Las Vegas and Phoenix. Not only are the investors, leaving in massive groves, also, remember this, the home builders, you guys, are massively, massively overexposed. So not only do we have this exodus of investors in Phoenix and Vegas, we also have overexposed, like number 1, 2, 3 in the whole nation, home builders. That's all it's a house of cards, you guys. It's a house of cards. In my opinion, I hope you see that. Investors can invest. Even, everyone wants to invest in real estate. They can't. It's too expensive even for them. We need price drops. And the investors are actually, in my opinion, especially all the bag holders, they're going to help with those price drops when they have to liquidate their properties in order to stay alive and not lose everything. Let's continue. Okay, so here's what I want to look at right here. This is the investor home purchases. This graph right here, as you guys can see. Now, investor home purchases fell most on record in the fourth quarter. So what I want to point out, guys, is here's where it fell right here. Okay, so you guys see that right here. So Q4 of 2022, investor share fell 46%. And I want to, basically let you guys know that's the most on record. So they're leaving the market in massive, massive amounts. Massive numbers. And I also want to point out this. So the last time this happened was the last crash, as you guys can see here. Now, investor demand, stalled out for several years, 1, 2, 3.5 years. So investor demand went down for 3 years during the last collapse. I believe we're going to see something similar as we move forward into this year. I don't know for sure, but it certainly makes sense to me. Now, the last time we had this was the pandemic, as you can see here, but that doesn't really count because we were locked down, right? So normally what happens is the investor share goes down a little bit. You guys see right here it went down, and you guys can see right here it went down. But it goes down just a little bit, right? But right now, we're not seeing just a little bit. We're seeing a massive drop. Let me kind of zoom in for you guys. Zooming in, you can kind of see a little bit clearer, but this is way down right here, you guys, as you can see. It's not looking good for the housing market. The demand is broken. Demand is broken because we have a systematic failure of unaffordability. Okay, now take a look at this. This is the investor share. So even though 46%, less in purchases, right? They're still at 18% of the overall purchasing. So I see this as they're going to be bag holders. These are probably, the people that can't fathom a housing market crash, that are just buying, or, it could be the other side of the coin where the people just don't understand. They just don't understand how the cycle works. They don't understand quantitative tightening. But either way, the fact that it's still at 18%, You guys, I just see 18% bag holders right there. But let me read this. While many investors have pumped the brakes, as they should, on home buying, which is good, investor market share has remained fairly steady. That's because individual home buyers are also pulled back. Investors purchased about 18% of all homes that were bought in the metro areas tracked by Redfin in the fourth quarter. That's comparable with 17.6% the prior quarter and down 19.4% a year earlier. So again, even though it's up, to 18%, that doesn't mean the actual units are there. So again, I'm saying, guys, the investors, they're not going to be able to save this housing market. The unaffordability has ravaged it. It has broken it. It does not work anymore. Just saying, let's move on. Prospect of home price declines prompts investors to back off. Investors piled into the housing market in 2021 due to the rock bottom mortgage rates and surging housing demand, and are now retreating amid projections that home prices have room to fall. But they've always had room to fall when it goes up 40% in 2 years. I'm just saying, U.S. home prices are up less than 1% year over year, compared with a 15% growth 1 year ago, and have fallen 11% from their peak. You guys remember, I said my definition of a crash is 15%. Although I think it's going to crash more than 15%, I had to set a baseline. I had to explain to you guys. I had to expose myself. 15%. We're at 11. And guess what? The pain is going to get magnified because the 10-year is shooting up. So when are we going to hit 15%? When can I say I was right? I'm just saying, I don't know when. Hopefully soon. In many metros, prices are already declining on a year-over-year basis. That's because the jump in mortgage rates last year dampened homebuyer demand. Higher rates also mean it's more expensive to borrow money, which eats into profits. Many investors are moving their money into other asset classes that offer better returns. For investors who are landlords, slowing rent growth is also making it more challenging to reap large returns. Do y'all see? It doesn't make sense to rent. It doesn't make sense to buy rentals for the most part. I mean, there are some people that could do cash, and there are some investors that do subject to, which in my opinion, subject to is just foolish. I think it's foolish because the lender can call that loan due, and most people are like, oh, that should never happen until it happens to you. Until it happens to you. And if we start having bank runs or any financial turmoil and these subject twos are at 2% rates and the lenders find out that you're violating the loan clauses, why wouldn't they collect from you? They know they got you. Just saying, they know they got you. Whatever, if y'all want to play that game, play the game. It's possible that investors will start to wade back into the market this year, given that mortgage rates have ticked down from their 2022 high, although they're ticking up right now. So I'm wondering what they're going to say next week, right? Flip, flop, especially if home prices show signs of bottoming. But it's unlikely that investors will return with the same vigor they had in 2021 because they lost so much money in the stock market, crypto, and a whole bunch of other things, and they're trapped in the housing market. It didn't say that. I added that part. That's because news of individual buyers who are still grappling with high housing costs, but no longer losing bidding wars after bidding war to investors. Investors were crushing locals, so I have zero sympathy for most of them. Investor home purchases in the fourth quarter of 2021 were near their record high, which is another reason why the year-over-year decline in 2021 was so dramatic. Investors bought 48,000 homes in metros tracked by Redfin in the fourth quarter, down from 89,000 a year earlier and 60,000 at fourth quarter of 2019 before the pandemic. Shocking amount, guys. Absolutely shocking. And if we look here, we can kind of see just how much investor demand sank. I mean, it fell off a cliff. Here's the investors bought half as many homes in Q4 as they did a year earlier. So you guys can see, look at this. So here's the actual unit number. I mean, this just plummeted. That's crazy, you guys. Now, not only did it plummet, again, remember what's happening right now. We're basically going through a second round of inflation. So the interest rates are shooting up. Investors can't afford it. Investors are not going to be able to afford it. Now, BlackRock, Blackstone, who are suffering right now and who have limited withdrawals from their, real estate funds, y'all, they're hurting. And personally, I don't care. There's more laws coming down the pike. So essentially, I don't think they're going to be able to get away with this for much longer. I mean, there's a line that has been crossed. I think it's fair to say that. Let's take a look at the top metro areas with the largest declines in investor home purchasing. Number 1, Las Vegas. Y'all remember, I just got back from Las Vegas. because I got sick and tired of listening to realtors in Las Vegas saying, oh, the market's better. Nothing's going on here. Everything's fine. And I'm just like, well, what about all this data? So I get there, I find thousands of homes that are being constructed without buyers, overexposed builders, and building everywhere. Not only that, 67% investor purchases down, 67% year over year decline. Number two, after Las Vegas, I drove my butt. It was so exhausting, you guys. I almost got in a car accident. There's like no lights on this one road and there's like roundabouts. It's really crazy. But anyways, I went to Phoenix. Same thing with Phoenix is worse than Vegas, in my opinion. But in Phoenix, investor purchases are down 66%. How are investors going to save us? Nashua County down 63, Atlanta, Georgia 62. I want to go to Atlanta. Charlotte, North Carolina down 62%. I also want to go to North Carolina. Jacksonville, finally a Florida city on here, 40 at 57.1%. We need Florida to start going down on prices. Then we have Nashville at 54, Sacramento, California at 53, Riverside, California at 53, and another Florida, which is Orlando at 51.8% decline in investor purchases. So, in conclusion, here's what all this means to me. It's important for us to worry about ourselves, right? And it's also important not to rush this process and freak out and allow other people to bully you or shame you rather into purchasing real estate. You guys, here's the thing. Biggest financial transaction of our lives. Purchasing real estate can make you a millionaire. It could better your life, but it can also ruin it, like it did to me when I purchased at the wrong time, when I kept my head in the sand. That happened to me. It's horrible. And that's what I'm warning you guys. Who cares about all the noise? Who cares about all the, the differences of noise? One thing's for sure. We need to afford where we live. And if you can't comfortably afford where you live and you're not purchasing something that you're in love with at a great deal, then my friends, we should probably wait. And another thing, you guys, I don't know that we're going to hit bottom in 2023. I think that if everyone was, united and stopped buying and stopped wasting their money, yeah, it could bottom out in 2023. Now, I had trouble talking about 2024 because I'm super afraid of the presidential elections and that whole narrative. I believe the presidential election is going to be about the housing market. But now that we have more data, now that we're seeing a little bit more what's happening, I think the housing market bottoms out in 2024, maybe even 2025. It really depends on who gets elected next and what their administration does. So, I think that we're going to be able to find great deals this year. And I have found what I believe is a great deal, but I think it's going to take a lot of hunting to do that because, again, you guys, the prices are just way too high still. But I don't want you to rush. I don't want you to panic and think if I don't buy this house, an investor is going to come and scoop it up. Don't think that. The reality is most investors, they don't know what they're doing and they're going to get burned. And as a result of that, it's just going to give us that are on the sideline patiently waiting a better opportunity in the future. So long as we can sit tight and make it through. All right. So save money, work on credit, and make more money if you can. And obviously, guys, understand what a great deal is. Have a great mindset. Love your life. Don't get so caught up in all this stuff that's going on. Let me fight that battle. That's why you guys tune in. And guys, don't forget, like the video if you can. And other than that, I really hope you guys got some value, insights, and perspective in today's video. And if you're out there investing in real estate, I wish you luck and I hope you win.